Welcome back. Well, a quick look at the Nifty because we've fallen below the 25,300 mark. It's a more than 500-point cut that we are looking at. And it is led by a lot of components, but HDFC Bank, that is one name that you should watch out for. That also is at the day's low. So we'll keep tracking all these market moves for you. But let's move on and talk about a corporate conversation. Atul Auto is in focus. For the month of September, company witnessed total sales of 3,361 units, which is up 26%. They also sold 978 units for EVs. Jitendra Adhia, the President of Finance at Atul Auto, is joining us now. Mr. Adhia, good afternoon. Thank you so much for joining in. Well, your total sales year to date are up 47% across all the segments. Is this something you will be able to do in the second half of this fiscal as well? What is the total growth you're anticipating in volumes? And ultimately, what would that mean for your revenue growth?
Very good afternoon to you, and really excited to see the September numbers. Obviously, in the first half last year, the first quarter was disrupted because of non-availability of OBD2 compliance. So, obviously, we cannot expect the similar growth in the second half, but definitely it would be more than decent. And in overall sales, we expect that we will be able to deliver much better numbers compared to the last year.
Okay, so you're expecting year-on-year growth. Can we pin you down to a specific guidance in terms of volume growth that we can expect of FY25 compared to FY24?
Absolute numbers would not be possible, but obviously
a range maybe.
Looking at the quarter first half numbers, definitely it will be much better than the last year.
So you had earlier indicated it would be a 20% growth in FY25. You would be back to pre-COVID levels. EV contribution should stabilize at 25 to 30%. Is that a doable number, or you'll actually exceed this guidance as well?
I am still on that stand only, and definitely expect a similar pattern of growth going forward as well. As long as EV is concerned, as you have mentioned earlier, almost 1/3 has been contributed by EV in our overall sales. That really gives us more confidence. We are setting up exclusive as well as composite dealership for sales of EV. Along with that, alternate fuel is getting settled into the market, and we expect that in whatever overseas market we have exported the volume, where we have repeat orders, and going forward we will be able to gain numbers from export market as well. So in totality, all three fuel is definitely going to contribute.
Okay, so you're speaking about the export markets. Give us a sense of how numbers there are panning out. Give us a sense of the targets you set for yourself, and also give us a sense of the margin differential you enjoy, by exporting your products versus the domestic market.
See, let me answer your last question first. The margin profile is more or less same, not much of a difference, but obviously export gives us a little better margin compared to domestic one. About volume, we are still into a seeding phase. Currently, 10% is revenue is being earned from export market. I believe that going forward, this may increase anywhere between 15 to 25%.
All right. Most of your volumes are coming in from the Ahmedabad plant. The last known utilization was 50%. How much has it increased to by end of this year? What will the utilization number look like?
See, as a part of economization and considering the current situation, we are operating from Ahmedabad plant only. Rajkot plant, we are doing machining and engine assembly is being done over there. So that capacity is intact, and once we are able to utilize current plant capacity, that is from Ahmedabad, we will activate that plant as well. As of now, the total utilization is Ahmedabad capacity utilization is anywhere between 60 and 70%.
Mr. Adhia, just to give us a sense of how policy action is actually helping you currently, and also, going forward, do you expect some of these incentive schemes to eventually wane, and do you expect that will have an impact on your demand? You've set very, ambitious targets as far as the electric part of the business is concerned, but do you feel that the waning away of, some of the incentive schemes that are currently present could have an impact on demand?
As long as EV is concerned, yes, it will definitely have, as long as, lithium-ion prices are not stable, and it is expected to drop further. So once it comes into stable form, and once the technology itself is stabilized, because when we are talking about lithium-ion, people started talking about solid-state battery as well as sodium-ion as well. So, from OEM point of view, we would definitely like to see how the trend moves. But as long as government incentive is concerned to promote use of EV, definitely it will help. And this time, PM E-Drive, which is covering comprehensively, even for testing agency and putting up public infra, that will also going to help OEM to accelerate their sales process.
All right. Mr. Adhia, thank you so much for joining in today with that take. Would have liked to talk a little more about markets, a big fall that we are seeing there, but we'll be speaking to you very soon again. So we are below that 25,300 mark and just at the 25,250 mark right now. So there's a further fall that we are seeing right now. We'll discuss that. But as we slip into a short break, here is some good news for the viewers. India's business news leaders now click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.